Are you tired of watching your gains go up in flames? I know the feeling. But what if I told you there's a way to protect your investments, even when the market takes a nosedive? It's called a stop loss, and today I'm going to break it down for you. First off, what exactly is a stop loss? In simple terms, it's an order you set with your broker to sell a stock when it reaches a certain price. Think of it as a safety net. If the price drops to that level, the stop loss order kicks in and sells your shares automatically. Now, why should you care about stop losses? Imagine you've bought shares of a company at $50 each. The stock rises to $75 and you're sitting on a nice profit. But then, bad news hits and the stock starts to tumble. Before you know it, it's back to $50. Without a stop loss, you might watch it fall even further. But with a stop loss, you could have set an order to sell if the stock dropped to, say, $65, locking in some of those gains. So, how do you set a stop loss effectively? The key is balance. Set it too tight, and you might get kicked out of a stock on a minor fluctuation. Set it too loose, and you could still lose a significant portion of your investment. A common strategy is to set your stop loss around 10 to 20% below the current price, but this can vary based on your risk tolerance and the stock's volatility. It's also crucial to review and adjust your stop losses regularly. Markets change, stocks move, and what made sense last month might not make sense today. Stay proactive and tweak your stop losses as needed to reflect current conditions. However, stop losses aren't foolproof. In a fast-moving market or during extreme volatility, your stop loss order might not execute at the desired price. This is known as slippage. Also, certain market conditions or illiquid stocks might cause your order to be filled at a much worse price than you set. In conclusion, stop losses are a powerful tool for managing risk and protecting your investments. They're not a set-it-and-forget-it solution, but with careful planning and regular adjustments, they can help you navigate the ups and downs of the market like a pro. So next time you're making an investment, consider setting up a stop loss. It might just save you from seeing your hard-earned gains go up in flames. Thanks for watching. Don't forget to like, comment, and subscribe for more investing tips and tricks. See you in the next video.